So using this currency pair, today I'm going to be doing a top-down analysis from the monthly time frame all the way back to the 1 minute time frame, so that you'll be able to choose which will be the best suitable setup and time frame for the type of account size that you might have. And I'll be showing you how to draw the necessary trend lines to make a perfect setup. So without wasting your time, let's jump into it. So this is the 1 minute time frame. That is where we are going to start. You start by drawing trend lines. This is your upper trend line, and then you draw your lower trend line so that you can see what type of pattern that you are dealing with. So after using the wicks, not the bodies, we see that this is a falling wedge. So the candles here are rushing to go touch the trend line, but after that we don't really know what's about to happen. So in order to see more clearly, you draw more trend lines. This is the 1 minute time frame. I wouldn't rely on it as it has a lot of fake outs, so you'll be given a lot of false information. So you need to draw as accurate of a trend line as you can draw. Then I'll draw my upper trend line again. So now that you know this is a bullish channel, then inside of it we have a falling wedge. So which means this falling wedge, there are chances that it might go bullish. But then if you see a bullish channel like this one, it always goes bearish. Since it's a flag, it always goes bearish. But in order to see even more clearly, you go to the 5 minute time frame so that there will be less noise. You see, there is now less noise. You can actually see where the resistance is. I will draw the first resistance, which is there. That's the first resistance where there is a drop as drop, and then to the right there is also some resistance. So which means price will make a bit of a difficult move there before it decides to even go down. It will at least retest there, it will at least do something there. So this falling wedge, at the end it goes up like that, and then for the bigger one here, it will go up and then it will go down. We all know that it's what it's going to do, but you just don't know when and where it will do that. So that is why you draw trend lines, so that you can figure out the nearest possible area of resistance which is there. So this is the second TP, which I wouldn't recommend. I would recommend the first one. I'm sure you know how to use the first TP. This is the second TP, the dangerous one and most profitable. Only greedy traders like me are the one that can use, or the non-stop loss gang, you can also use that as well. So this is the second resistance, which is even more powerful. I'll show you why. I'll illustrate using this arrow. So you can see that at first there, and second there, and third, the resistance has been failing to do something. There's something similar about them, or we're failing to break. Okay, and then this bearish candle, it finally broke, right? But it looks like it's going to go back again in line with the others. It seems as if the area of confluence is still powerful and it cannot break it that much or yet. So if it fails to break it, then it's going to go ballistic, bullish. It's going to go up. So when it goes up after the breaking and whatnot, then it will finally come down to break the big trend line there. Okay, so what I see is that, okay, let me first show you the whole thing, then I'll make a conclusion which I was about to make. I think I'll do that at the end of the video, so that you can see which type of setup or time frame you can actually use with the type of account size which you can have. So let me remove these things so that you can see clearly. So we are in the 15 minutes time frame. You can see it's even more clear. So the thing you must notice is that the more I'm going higher, is the more I'll start to deal with the bigger trend lines, not the small ones from the small time frame. Now you can see that we can actually deal with the bullish flag here, which we have. we can no longer look that closely inside them where we had made the falling wedge. We can no longer pay that much attention to it, as we are starting to pay attention to the bigger picture here, which we have resistance. You see, there are a lot of resistance here, but then this bearish candle decided to break, and when it did break, it will go down, right? But then the next candle, after this one closes, it will come back as a retest to tell you that it's either this area has been finished completely, it is now weak, so we look forward to going even more down. Then we go to the 30 minutes time frame. You see the falling wedge is getting even weaker. We can't even see, there are now like 2 candlesticks there, so you can see clearly. So the best thing you do is you draw even bigger trend lines so that you deal with even more bigger stuff. So the more higher you go is the more type of trend lines you might even draw, which are even bigger than the last ones. So the smaller trend lines here, you can even use it to sharp entry a very small account. That can work. The bigger here, you can use it when you have a bit of money in your account. That can work. So now that I draw on 30 minute time frame, it's not that clear. Yes, I see that it's a bullish flag again, but it's not clear. It's not something that you can make the final decision with, that you're going to either sell or you're either going to buy. It's not clear. So you draw again here. You can all see that this is bullshit, right? I think this is bullshit. Some sort of a falling wedge. Yeah, it's a falling wedge, but you can't be clear that you know that it's going to go either up or down. You can be clear on that one, as I can see. But what I'm very sure of is here, the resistance here to the left, which I've put my shadows on area. So the thing is that if the price, okay, I'm not saying it will, I said if it goes up to break the trend line there, that is a definite sell there. That is a definite sell there. You need to sell if it gives you these conditions. Okay, most of you, I know, you will sell thinking, well, it will go up there since there's a lot of resistance. No, don't do that. Don't do that. Okay, sometimes it won't go there and you make a loss, so don't do that. You wait for it to go there, because I'm sure you've read this somewhere that trading is 10% selling, 10% buying, and then 80% waiting. This is what they mean. You wait, you don't buy for it to go down there. You don't do that. So I'm trying to figure out something which I can see to be able to make a decision whether to buy or sell. But we can all see this. This is a very stupid trend line which I've drawn just right now. It doesn't give you anything. It's very stupid and it's shapeless. So I'll remove it. So this is looking a bit better. We have a falling wedge. A falling wedge always goes bullish, we all know that, but sometimes it can even take long to the point that you'll blow your account on the floating loss. So all you have to do is put your triggers so that you wait for the price to go there, then you get in. That's the way to do it. Right there is a very powerful good resistance that when price goes there, you sell. Okay, as for me, I'll go full ballistic margin over there so that I get the most of it, because I know that it will go down when it goes to that point. Okay, so inside here we have our bullish trend, which is a flag. A flag always goes down, okay, but the point you need to know is that you don't know when it's going to go down. So you start drawing trend lines so that you can actually figure out a way to do your sharp entry. Most would like to go down to a lower time frame, yes, and that's perfect. You see, this is why I started drawing on the 1 minute time frame and 5 minutes. I'm sure you saw a falling wedge, right? And the falling wedge always goes bullish. So at the lower time frame there, it was going to go bullish. Then you would buy there, right? And then when you buy to the 5 minute time frame, it was saying sell. Okay, 1 minute was buying, the 5 minute was selling, the 15 minutes was also selling, the 30 minutes, I don't know. Then here in the 1 hour, I think it's about to buy. It's about to buy. So with this information, now you know that if you have a big account, you can just buy, and then when it goes down with the floating loss, it will be okay, because you have a big account and you have controlled the floating loss and you did not go full margin. You can just do that. Sometimes I like to do that because you don't really need to focus that much on making the setup. Okay, all you have to do is make a setup, then you know that this type of pattern at the end it's going to go bullish, right? Then you just buy, use a few orders, not full margin, then you put your TP, well, your SL, but well, just don't put an SL, just put your TP. I would rather put a TP, not an SL. Like, I really don't have energy to put an SL. Have you ever noticed that whenever you try to put an SL, price will just go down there to hit your SL, and then you continue putting your SLs, and then price will continue hitting them. At the end of the day, you won't have any money. There won't be need for that. As for me, I like to use the manual TP and the manual SL, like the man I am. I'm not saying you're all women. I'm just saying, like the man I am, I just like to do that. Okay, I don't like to follow the crowd. Yeah, use your SL, use your nah. I don't do that here. I like to be very unique. I'm sure you've seen that. There's no need for me to prove anything to anyone. So I really hope you're getting what I'm trying to say here on how to draw the trend line. So now I'm in the daily, right? I don't know how I skipped the H4. Now I'm in the daily. The daily is not clear in the inside where it was bullish. It was a bullish channel. It was a flag. It wasn't clear. So what you need to do is to draw the trend line outside, right? You need to draw the trend line outside. So when you draw the trend line outside of a bigger channel, this is the D1, then you can actually tell what you are dealing with. So we draw our lower low, our lower trend line, then our upper trend line. We can see that this is a bullish channel. This is a bullish channel, but you can actually tell where to buy or to sell. So it's very piece of useless information, because you can't really make anything out of it. As it looks like this. I mean, if you were you, what would you do here? What would you do here? There's absolutely nothing to deal with here. It's just an upper trend line with two stupid trend lines, then that's it. So I will go to weekly. So the weekly is for the guys who have a bit of some cash in their account, because when you have a small account and a retest occurs on your trade, which is opposite, you won't like it. But as for me, I think it gets even more clearer when you go to the bigger time frames. When you see a trade, this is a very clean setup. In order to make it even more cleaner, you will use the higher time frame, the higher before this one. I think that it's after this one. That's what you do. So here it went to the trend line and then it came back. So this indicates a fake out. This is indicating a fake out. Okay, so what happens when a fake out comes is that most people know that, so since it's a fake out, price did not manage to break the trend line, so it's weak, then they would sell, right? And they are correct, it's a sell. Okay, I'll get to it. Let me show you first here. So you draw your trend lines again, so that you can just make sure you have a good leverage and a good spot to enter. So when you draw trend lines, you now need to calculate the TP. Okay, so the TP can even guide you to know if it's going to break out on the big trend line or not. So this is the second TP. You come here, you see, so this is the exact value. It started to retest when the second TP has been raised. You can all see that, right? You can all see that. And then it made a fake out back into the trend line. That is what it did there. Okay, the first TP, for those who like it, it's very accurate, and I guarantee you profit when you use the first TP. you will get profit. That is what I know. When I've been trading, that is what I noticed. So this little bearish flag, which is this long channel, decided to go bullish, right? So then this bullish flag here, is it bullish? Patterns like this always goes bullish. That is what I know. They always goes bullish. So I'm using the knowledge which I have of the market. So we are now in the monthly. Okay, so here's what many people make mistakes when they know it's a fake out. They know, yes, it is a powerful bearish momentum, so it's about to go down, right? Then they put full margin sell there, and you'll be correct and you make profit. Look, after it closes, then you sell, then it goes down there, you make profit, right? But the point is, it might not end up in a sell as you might require, because they know that you guys, you like to enter early. So for the early stop loss takers, they'll actually make that candlestick break the trend line going upwards. I think it even goes above that wick, that long wick there. It will even go above that, and after it blows your accounts, then it will come back, then it will come back, and then back in the trend line. It will make maybe a small wick of a bearish candle, sort of a hammer, but it would have blown your accounts already. So then there's that. You need to make sure you know that you don't sell early. You wait for it to break the trend line going upwards, then you sell. Then it will actually go down. Since it has made a fake breakout there, you have the answer that you need. Yes, the trend line is telling you that at the end it will go up, right? But you also need to listen to the candles. If it made a fake breakout there, a fake out, it means there is still bearish momentum. So it might sell to the point that when you buy, you can even blow your account. So you wait a bit for it to go up, and then you sell. It will come down with a fake wick and get back in the trend line. I'm sure you must know this type of information, because I've seen that before. They have blown accounts using those type of things. So you need to know that. You see, this is a falling wedge back in the 1 minute time frame. It's about to go up, as I've said. It's about to break going upwards. So if you have a small account, that is where you use. But then if you're using other brokers, then it won't work that much for you, as the spreads are very, very tight. You will need to use the broker which I'm using, which is very low spread, that the moment you start selling, that's the moment you start making a loss or start making a profit, because the spreads are the best. They are perfect. Okay, they are in it for you, but if you fail, well, that will be your own cup of tea. So this is the second TP. So now I'm going to make my trade expectation. So I know that yes, in the 5 minutes it's selling, it's about to sell, right? But it's not going to sell at the moment. It will break the small trend line inside the bullish channel, and then it goes up. When it goes up, that's when it will come down to break the bigger one, going for the second TP there. That is what I know will happen. So in order to draw trend lines, that is the things you need to take note of that might happen when you're trading. So you need to know those things. So it will be like this. That is a fake out. A fake out, it indicates a bullish power right there, because it made a fake out thinking that it was going to go down, but it did not go down. So it's going to go up, and then at the end in the monthly time frame, it's a huge buy, right? So in conclusion, what you would know is that since you know in the monthly time frame it's a buy, if you have a big account, let's say 1,000, 5,000, going there, you can just use small lots. Then you enter your buy positions. There's no need for you to care about the floating loss. There's no need for you to do that, because at the end it's just simply going to go up. Okay, simply it's going to go up. And then if you have a medium account size, then you might actually consider going a bit of the lower time frame, like such as the 15 minutes time frame here, then you sell, you buy a bit, it goes up, you sell a bit, it goes down, you then buy using the information you are being provided with the trend lines, because at this moment here you know that it's going to go up right in the small trend line, and then goes down in the small trend line again, and then the big trend line is going to go up, and then when it touches that area of resistance it drops. So when it drops, take notice in the 1 hour, this is a falling wedge, right? And the falling wedge always goes bullish. So after it drops again, it needs to go up. When it breaks that bullish, that falling wedge, it goes up, right? Then we go to the H4 in the week 1. We know we have that flag which needs to go bullish, right? So then you wait for that one, you then buy. That's what you do. Well, that's what I always use in most of my videos. There, you see, I've drawn a bullish flag there. A bullish flag always goes bearish, so you will expect a sell there, but it won't necessarily just sell immediately. It will first go to the resistance and then it goes down, so you need to take note of that. I hope this video was very useful because I put as much information as I have. So I was doing gold USD. I'm going to do all types of currency pair, doing top-down analysis until you get the point where you need to get the setup, whether you want to buy or you want to sell. This is what you need to consider, what I've shown you in this video. So I'll be doing a series. So this is the series 1. I'll be doing a series so that you really understand on this kind of top-down analysis, so that you make a good decision